crypto is getting ready to explode, and there is one key metric that can help you predict when the next move is going to happen. In this video, I want to break down what that metric is, where we are in the cycle, and what you need to know to stay ahead of the next big move. You don't want to miss this one. Like and subscribe, and let's hop into today's video. Now guys, what I'm talking about is global liquidity. Liquidity is essentially just the amount of money floating around in the financial system, ready to be deployed or already deployed into risk assets. It's one of the main drivers, if not the main driver, of crypto and altcoins. Understanding where liquidity is and where it's likely to go can help you become a much better investor. In fact, staying on top of this one thing can make you a better investor than most out there. This is a technique that many of the world's most sophisticated investors use to predict market movements and to know when to stay in or get out. And so have a look on your screen here, guys. We have M2 money stock, that's the amount of money floating around in the United States in the financial system. And then we've got the altcoin market here in red. And what we're seeing is the close connection. And for those of you who have been in crypto, you're aware of this. You know this connection. What we're going to get into next is where's liquidity today and where is it likely to go? Are the wells drying up, or is liquidity about to come in abundance and drive asset markets higher? Now guys, the flashing indicator that's showing me that alt season is still ahead of us is this chart right here, the global liquidity cycle. Central banks push money into markets or they pull it out. And that's responsible for the high and the low. Central banks putting money in or pulling money out makes asset prices rise and fall as that happens. And you can see that we don't always come up to this red line. But this time I think we will, because central banks all around the world have more printing to do. The US and China in particular, the US has about $9 trillion of debt to refinance in the next 12 months. And this chart right here shows it perfectly. These are the different central banks around the world. We got the US, China, Japan, Europe, England, and they all pump in and pull out liquidity in a cycle. You can see the pattern here. This is COVID. This is printing half the world's money supply so that the world doesn't fall apart. And this is the bull market right here. But you can see this is the bear market. Coming down here, this is the bear market. And we have yet to go back up. We have yet to go back up even modestly. You know, these are kind of normal cycles. The COVID cycle was pretty crazy. But these are normal cycles and we still have yet to get there. We have further to go in this cycle. And altcoins do respond to this. They do respond to liquidity. Let's start off with Bitcoin, for example. These are the systematic influences on Bitcoin. Notice that 40% of Bitcoin's price action is made up by global liquidity. We got about 37% in gold, and then 22% is investor risk appetite. However, investor risk appetite and gold are actually both influenced by liquidity. As more liquidity comes in the markets, investors know that this means asset prices will rise. And so they adopt a more risk-on mentality. As the central bank cuts rates, like they just did, that means more liquidity. Rate cutting inspires risk-on activity. And so really, the entire composition of systematic influences on Bitcoin has to do with liquidity. Liquidity is very important. And I got a clip here from Raw Paul and Mike Howell, the liquidity gurus. They're going to explain how the markets are basically run by liquidity. Check out what they have to say.
There is a liquidity cycle, and that seems to be paramount. And the interesting point is, which I'm sure you'll attest, is that, financial markets are responded not to the real economy, they're responded to the liquidity cycle. That's what's going on. So we need to understand this, like it or not. I mean, it's become the paramount issue in markets as far as we can see.
And so markets right now are responding to liquidity. They're responding to the money coming into markets. Eventually, they will respond to the real economy. That's the business cycle. Have a look at some of our past videos. We talk about the business cycle a lot, and we'll be keeping you up to date regularly to let you know just where we are in that business cycle. Right now, we're not in it yet. We're going to eventually, and that is going to really drive a massive alt season in conjunction with liquidity. And so have a look at this chart here. This is showing you the sensitivity to a 10% global liquidity shock. Bitcoin, Ethereum, Solana. This is the average, and then this is in the last 18 months. And this is a multiple, showing you the multiple to a 10% global liquidity shock. So Ethereum showing the most sensitivity, and Ethereum is going to lead this alt season. Ethereum is going to show the alts the way. It's going to show the other altcoins the way to Valhalla. And I'm sure you've all seen this chart before, the path to alt season. It goes from Bitcoin down to Ethereum, and then it trickles from Ethereum into large caps, down to mid caps, small caps, and so on. And so when we're seeing the sensitivity that Ethereum has to liquidity, and then we're projecting that liquidity is about to go a lot higher, we can say to ourselves that altcoins, Ethereum, Bitcoin, it's going to follow it up. But don't take my word for it. Let's hop into the data. Shout out Cross-Border Capital, by the way. These guys are the liquidity gurus. No liquidity update is complete without these guys' information, and we work hard to find the best information to bring to you on a regular basis. So we appreciate them, and we hope you appreciate us. So we got U.S. Fed and U.S. Treasury, all stimulus. Again, take a look. This is the bull market. This is the 2021 bull market. These different colors represent different sources of liquidity coming from within the United States. This is Treasury QE. This is the Treasury printing debt and selling it to people, Treasury bonds. This is QE. This is the central bank printing money and using it to buy bonds. And then this is not QE, and this is kind of like a hidden QE. This is the central bank or the Treasury kind of taking backdoor kind of sneaky ways to get liquidity into markets. Again, it's all about getting liquidity into markets. This is the key thing. And once you understand this, that markets require liquidity to function, absolutely, that governments and entire nations require liquidity to keep their debt solvent. The world runs on debt, and more liquidity is needed to handle more debt. And as we know, debt's only getting worse. We are getting in more and more and more debt, which means more and more and more liquidity, which means higher and higher and higher asset prices. That's what keeps me bullish. That's what keeps me convicted. And so let's have a look at the next big player. We got the People's Bank, net liquidity injections. This is China. Right now, we're seeing lots of liquidity injections. They've injected trillions of yuan, and they still have more to go. Now, take a look down here. This, remember the pullback we had earlier this year? This is that. This is a big part of that. This is China pulling money out of the system because they needed to strengthen their currency. So they pull money out of the system, and it actually strengthens their currency because it makes their currency units less abundant. It makes them more scarce. And the more scarce something is, the more valuable it is. So if you need to strengthen your currency, you pull money out. Now, the Chinese are trying to weaken their currency. They're trying to print more money, and here it is. And so up the liquidity cycle we go. And I know what you're thinking. When does it end? You know, people have been told, I've been told that this cycle is supposed to end soon, at the end of 2025. That's when the cycle is supposed to be over. That's when the liquidity is supposed to dry up. That's when assets are supposed to fall. But we haven't even seen an alt season yet. We haven't even seen Ethereum hit new all-time highs yet. So I'm not fully convinced that the cycle ends in the next 3 months. And neither are the world's best. I got another clip here from Mike and Raul. They're going to break down when they think the liquidity cycle is going to end. You're going to want to listen to this one.
Now,
when do you think it finishes, by the way? My view is it's been extended. It normally would have finished sometime this end of this year, but it feels like it's going to push out into Q2 next year.
Yeah, I mean, that's almost exactly where, if I go back to looking at this cycle, that's where we would sort of suggest it's probably going to inflect sometime around about early 2026.
So early 2026, about Q2 26. I take their word for it, and everything makes sense to me as to why. Have a look at one of our last videos. We actually broke down why the 4-year cycle might be different this time. Fundamentally, the same things that drive bull markets are still in place. They've just been pushed out to the right a little bit. Have a look at that video if you want to learn more about that. But as for this cycle, I don't think we're anywhere close. And have a look at this. This is another great indicator right here. The GMI Bitcoin Cycle Top Finder. Do you see what I see? I don't see us I don't see us anywhere near the top. It shows the Bitcoin blowing, it shows the cycle top finder blowing past the Bitcoin price, and we are just not there. And if you look at global liquidity projected out for another 12 weeks, we're projected to go higher. Global liquidity is projected to continue to rise. Mike and Raul tell us that they think the global liquidity cycle is going to go until the second quarter. We did a video last week telling you why we think this cycle is a little bit different, a little bit pushed out to the right. There are a lot of reasons why we think this cycle is just a little bit different. We think it's going to last a little bit longer. And that's why you should be just a little more bullish on where you are right now. Don't worry about altcoins. Don't worry about the altcoin market. The time will come. The time will come for alts. Understanding global liquidity and keeping an eye on that and knowing if more liquidity is coming or if liquidity is getting pulled out of the system, can help keep you on the right side of market risk. It can give you the conviction you need to sit comfortably through the volatility, and that's what this channel is all about, helping you become a more comfortable investor and ultimately a more profitable investor. And so hopefully you found this content to be helpful in your journey to become a profitable investor. If you liked it, give us a like and subscribe down below. Be sure to tune into our next video. We're going to break down more concepts like these. Thank you for being here, and we'll see you in the next video.